Hello. Should we start, Sanket? Yeah. Hello. Very good evening, friends. Again, I would like to thank Ankita and Sanket for setting up this session for me. The last session we had on 4th. Hopefully, each one of you must have gone through SA 300 series. Not sure how many of you have already gone through it, but whoever has gone through it, definitely come up with your questions. Even for the last session, if you have any questions in place, definitely you can share it in the chat box, and Ankita would share it with me. So I will definitely address each and every question of yours. In the last session, basically we tried to create a foundation with respect to risk assessment and internal control evaluation. What we will do in today's session, we will deep dive into the risk assessment and internal control evaluation landscape. How we will go about it? First, we will we will go through what all practically we do. All the practicals we will go through, whatever documents, each and every document and record which we create as auditors as part of risk assessment and internal control evaluation procedures. So that we will look into each of those documents, all the critical and important documents. Then after looking at all the documents in a flow, then we will try to connect it with what is given in the theory. So we will focus more on the practical aspects today. In the last session, we focused more on creating the foundation through learning what is there in theory. So definitely we will go through theoretical aspects as well, because that is the application of practical is the application of theory only. So that is the most critical thing which we need to understand in detail. Then only we'll be able to do justice to our practical application. But today, we will majorly focus, as I said, on the practical application of that part, how we go about it. So definitely it is going to be very, very interesting, because what you will see now, that you will be doing in future. Not necessarily that that will be the limit, or that will be the extent till which you will be doing your work. Maybe beyond that, with the advent of AI and RPA in process. So definitely the audit process, the way we look into it now and the way we will look into it going forward, there will be a paradigm shift altogether. So today let me share the screens for your reference. Just give me a moment, please. So hope everyone is able to see the screen. Sanket or Ankita, can you please confirm? Yeah, it's visible. Okay. Thank you. Thank you. Yeah. So what I have done for you, that I have compiled all the major documents and records which are created by auditors as part of risk assessment procedures and internal control evaluation procedures at one place. So one by one, we will look into each of the documents. Wherever you come across any query, do not hesitate at all. Be very straightforward. You can ask your query. There is no problem. Any query may be not very right, or it may be a situation that you may feel that the query I'll be asking, that will be silly. So let me tell you, here all are to learn. So please do not judge from that perspective, and do ask queries. As many queries you ask, that much clarity you will achieve. And be rest assured, I will address each and every query whatever you raise. So let's start the process of practical application of whatever we studied in the last session. Even today, whatever we will learn, that we will try to connect with the theory. So that will be that we will do in the later half of the session today. Since 2 hours only I have, So 2 hours may not be sufficient, but still, what I will do, I will try to cover as many critical aspects as possible in the first 1.5 hours, and the last half hour I'll keep for addressing your queries. If still we are left with any further time, we will look into one case study which you will try to address at your end at individual level. So let's start this session. So I have just included here the entity understanding. Yesterday we discussed about that we need to understand the business in detail before the start of audit, and even before the start of the risk assessment procedure. Understanding, critical understanding of the business is very important. Unless and until we understand the business, we will not be able to do justice to our role as auditors. So I'm just giving you an example that how we can document our understanding and what all aspects needs to be covered as part of the understanding. If you see, first what we have captured here, the company profile. So what will be the source of this company profile? This company profile you can get either through the company's website, from the public, from social media platforms. Even you can get this, get certain information about the company. And also company management may provide you with a write-up on what basically the company does, what it is engaged in, how it operates. All the information they will be sharing, they can share a write-up also. And we can take that information through inquiry with the management as well. So inquiry with the management and the concerned process owners is very critical, because you will get the first-hand information from them. Apart from that, even websites, social media, and publications, business publications, all those give a lot of inputs about any entity to you. Not only entity, even the understanding of the industry too is extremely important. So these are the sources through which you can gather information about the industry and the company. So in this particular example, this particular company is into steel making. They make ferroalloys using iron billets and rolled products. So they have a manufacturing facility at Odisha. I'll just run through it fast to save time on it. They have a production plant of the company in Rourkela. The company is listed. They had undergone one amalgamation and amalgamation with another company. They have a wholly owned subsidiary now. Now that was the part of the company profile. So this was the very macro level and basic information about the company and its background, how this company has, whether this company has grown organically or this company has grown inorganically. So that information we can gather through all those sources, whatever we discussed just now. Then the next aspect which is critical to be understood, that who manages this company. So then we need to understand who is in the board of directors, who is chairing the board, who is the managing director, are there any non-executive directors in the process. So if all those information, including if any independent directors are also there in the company, even that information needs to be gathered with their qualification and experience. Why qualification and experience is necessary to be understood? To understand whether the person who is leading that role, whether he is compatible and whether he is competent enough to do that role or not. To assess that, this qualification and experience becomes critical, extremely important for us to understand. Now the next part, next information which is critical, apart from the board of directors, there may be certain individuals who are actually managing the company, like say for example, chief executive officer, may CFO, company secretary. All those people may be key management personnel. So definitely we need to refer to KMP definition in Companies Act, and accordingly we need to gather the information. But legally that may be the case, but in substance there may be certain individuals who may not be identified as key managerial personnel, but they are entirely involved in decision making. So that information also needs to be gathered as part of our audit understanding. Now coming to entity level controls. So this entity level controls, in the next document we will discuss it in detail, that what all entity level controls we need to understand, we need to delve upon. So that we will be discussing in the next document which we'll be going through. Then what happens? Every board constitutes different committees to manage its operations. Not only operations, but even its compliances. Many committees are mandatory to be formed or constituted by the statute. Say Companies Act may ask the company to form particular committee. Even SEBI norms, if a company, if, since in this case the company is a listed company, so even SEBI may ask the company to form or constitute certain committees. So those committees needs to be formed. So here in this company, if you see, there are certain committees which have been formed, like audit committee,
Sir, sorry to
stakeholders.
interrupt,
Yeah,
but there's no documentation shown on the screen. It's some Excel file.
is it? Okay, let me just again check it once. Just a minute. Now, what
Yeah, now
document is
it's fine.
visible?
Yeah, now it's fine.
No, it's fine, no? Okay. Extremely sorry, guys. So I'll again run through it in a nutshell. But anyways, I have discussed it in detail till now, but I'll just run through it in a nutshell. You can just see the document now. So this is the company profile which we discussed about. The company is into steel. Plant is in Rourkela, listed company. It entered into a scheme of amalgamation in 1314. It now has a wholly owned subsidiary, and it has undergone corporate debt restructuring as well in the year 2014-15. So this is the background of the company which we discussed about. Then next is the people who are managing this particular company. So that is board of directors. In board of directors, there may be chairman, there will be a chairman, there will be non-executive directors, executive directors, there may be independent directors. So all that information we need to gather with respect to the directors. Who are the directors and what is their qualification and experience? Why qualification and experience is important? To understand whether the person is competent enough to take or lead the role whatever has been entrusted to him. So this is about the board of directors. Now coming to KMP, key managerial personnel. It's not necessary that a company will be identifying or designating key managerial personnel as KMPs. But practically what happens, there may be situations where a particular individual is involved in decision making process, but still he has not been identified as KMP. So as auditors, we need to be cautious, we need to be careful, and if we come across any such situation, we will have to identify and report it. And not report it, basically we need to understand the implication of it, and accordingly we have to make the judgment and act. Now coming to entity level controls. Entity level controls we will cover in detail when we move forward to the next document, because this is one detailed area which I want to cover subsequently. Board and people charged with governance, those form few committees. So those committees may be formed voluntarily by the company, and there is a requirement by the relevant statute, maybe Companies Act or SEBI, as the case may be. So those authorities asks the company or requires the company to create certain committees. So those committees have to be in place to be in compliant with those regulations. So if we just run through what all committees this particular company is having, since it is a listed company, one audit committee they are having. Audit committee's role is to oversee the audit process, how the audit is being undertaken by the statutory auditor or internal auditors, and they also oversee the overall financial statements and financial position of the company. Stakeholders relationship is there. So basically, with shareholders, investor relationship is very important. So there is one committee which engages with the shareholders. They basically identify what all information have to be passed on to the shareholders. So those things are taken care of by the investors committee, and if any investor grievances are there, so that is the committee which will be taking care of it. Now, next is nomination and remuneration committee. So nomination with respect to director nomination, or for a KMP nomination. So those uh, activities are being undertaken by the nomination committee, and remuneration committee is entrusted with fixing the remuneration of the KMPs and basically managerial personnel who are involved in the company. Then we have a corporate social responsibility. So for certain companies who are meeting certain thresholds as required by the Companies Act, so they need to create corporate social responsibility. They have to undertake these activities for for society as a whole. So, for the betterment of society, this CSR initiative has been brought in by the regulations. So now the companies have to create one corporate social responsibility committee as well, to ensure that whatever funds are being designated for the purpose of CSR, those funds are being utilized effectively or not. Now, next committee is management and finance committee. So basically, this looks after the overall management and finances of the company. So likewise, there may be other committees also. So in this particular example, they have these committees in place. Then next is code of ethics, codes and policies. So codes and policies are basically the policies which have been framed by the company, by the management, by the people charged with governance, to ensure that no wrongdoings happen in the organization, whether from the perspective of monetary losses, whether from the perspective of compliance, or environment, or social responsibility, corporate governance. From none of those perspectives, anything of that matter, anything of that sort happens, to ensure that lot of policies are brought in by the committees. So those policies have been listed here. So basically, understanding as an auditor that these policies are in place, that is very important, because a lot of these policies are even required by the statute also. And apart from that, what all policies the management has framed, those policies we need to understand as auditors, because that may have an impact on the overall operations of the company. Similarly, if you see, there are a lot of financial related policies, and there are a lot of operations related policies. Even if you see, environment, water and wastewater management systems, disaster management plan, air pollution control policy, all these policies are in place in this particular company, and many of these policies are required by the statute as well. Relevant statutes, say for example, pollution control board has come out with certain requirement that you need to maintain this policy, so that policy has to be in place. Investment policy, delegation of power manual, and organization charts of corporate. This understanding what is organization chart of corporate, this also I will show you what a typical organization chart may look like, because that is the backbone of any organization. Organization chart is something which is basically the structure in which the company operates, who will be reporting to whom, how many people are reporting to whom. So all that picture you will be able to see in an organization chart. I will be sharing it with you in some time. You will just have a look at it and you will get to know what exactly it is. Now coming to compliance with regulations. So what all regulations, what all applicable laws are there? So that has to be listed. As auditors, maybe there are a lot of such laws like MMR, mines rule, mineral concession rule. So all these laws, maybe as auditors, we are not competent enough to be able to ensure that whether all these laws are being complied with or not. But there are certain laws and regulations which all the stakeholders expect auditors to look into. So if we do not get into the nitty-gritties of each of these laws, which are majorly operational laws, but still what we can do as auditors, we can definitely ask for the list of regulations applicable on the entity. What are the licenses and registrations it is holding, what is the present status of those licenses, registrations, and what is are there in non compliances in that respect, or have they have received any notices from any of these authorities, whether there are any litigations, ongoing litigations under any of these acts. So all those questions we can ask from the management. So this is the list of regulations which is applicable. So it's a big list of regulations which is applicable on the entity. Then who are the operational and basically departmental heads? So that information is very important, that what is the department and who are the responsible officials for that, who are the head of the departments, because while we undertake our audit function, we need to interact with these people, because they will be the people who will be driving our audit. Otherwise, if you just rely on the concerned process owner, maybe your audit requirements will not be fulfilled. So it's very important to have the contact and details of these responsible official. Now next is compliance with regulations by contractors. So in factory setups and organizations which are having manufacturing facilities, so generally what happens, they have people on roll, and they also have contractors for various activities. Like, contractors may provide labor, we may hire certain contractors for our project work, we may hire contractors for any other work for that matter. So since we are the principal employers, say for example a contractor is providing labor to us, so those are the labor which are who are not on our roll. Those laborers are on the role of the contractor, but all those laborers are working on our instructions and at our premises. So we become the principal employer in that case. So when we become the principal employers, it's our responsibility to ensure their well-being, to ensure whether all the compliances which are required to be done on their behalf, like PF, ESI and all. So all those compliances are being done by the contractor for those employees or not. If the contractor is not complying with any of those regulations, we being the principal employers, the the responsibility comes on us to ensure that if we do not do that, then probably penal action may be taken against us also, even though those people are not on our rules. So this we need to keep in mind, that even for contractual laborers, we need to be extra cautious that all the requirements are being fulfilled or not. So likewise, there may be safeguarding of assets also may be a case where what we need to understand, like what all machines or what all plant and machinery is there, what all properties, equipments are there. So whatever be the assets of the organization, whether those assets have been safeguarded properly or not. How safeguarding is ensured? Through taking insurance, because a lot of for fixed assets and inventories, for all these assets, generally entities take insurance coverage. So whether they are covered adequately or not. It should not be the case that our stock value is say 100 crores and we have taken insurance only of 20 crores. So that is under coverage, and company is exposed to risk of potential destruction of goods. So they will not be covered in that case. So we need to see whether whatever assets are there with us in the company's balance sheet, all those assets have been adequately safeguarded or not. So that is one. Insurance could be one part. The other is ownership documents, whether we are actually designated, the company is actually designated as the owner of that property or not. It should not be the case that ownership has not yet transferred and still we are showing that particular item in our financial statements as an asset, as an owned asset. Then one more process what we undertake is physical verification of assets. So company may undertake it by using their internal employees, or they can outsource it to any third party agency, or as auditors we also need to do some physical verification when we undertake our audit procedures. Now, deployment of security personnel. So definitely this also safeguards our assets, and taking AMCs, so annual maintenance contracts. So maintaining assets is also equally important to safeguard any asset. So these are the kind of and certain general information. This is very important. General information technology controls, GITC. So basically, what accounting softwares or operational softwares the entity is using. Since today's business predominantly today's business operates on IT tools mostly these days. So it becomes extremely important that whatever IT controls are there, whether those are sufficient in the organization or not, whether those safeguard the entity from any malicious activities. Malicious activities may happen through external sources also, and it may happen internally also by the employees or even by the management. So GITC controls testing is very important. This we will cover separately in detail. So this is just an indicative understanding document. This is a high level understanding document. I will now take you to a detailed level understanding document, which you will see and you will understand what is the accounting health of the entity. Because as auditors, we are majorly required to report on internal controls over financial reporting. From understanding perspective, understanding the whole internal controls is important. But from reporting perspective, we need to be very sure about internal controls over financial reporting. So when it comes to financial reporting, it means that ensuring the accounting health of the company is very important. How do we ensure that? Let me take you through another document. Just give me a moment. Hope screen is still visible. Can anyone
Yes, sir,
confirm
it
that?
is. It's
Yes,
visible.
it's visible. Okay, thank you. Yeah. So see, if you just have a look at it, this is a detailed accounting health checklist through which we can ensure that how is the accounting health of the company, how is the control mechanism that is being followed by the company. So this will give us a detailed understanding of this about the entity as a whole, but process level understanding that will come subsequent to this. So let us just run through what kind of questions we will ask, or what kind of information we need to get from the company to understand the accounting health of the company. Like which accounting software they use, whether company has enabled backdated entries in it, whether so basically it means that whether they have enabled the audit trail facility or not. Then whether accounting manual is in place. Accounting manual is nothing but SOP for accounting, standard operating procedure for accounting, that is also called as accounting manual. Then are there any operational and financial standard operating procedures? If any SOPs are in place, we need to obtain the list of those SOPs. What is the frequency of book closure and reporting to management? So book closure may be on a monthly basis, the company may be undertaking book closure process, or maybe on a quarterly basis, or maybe on an annual basis or a half yearly basis. So whatever frequency they are resorting to, that we need to understand, and at what frequency that is being reported to the management. Understanding that also becomes equally important. So reporting may be two faceted. One is reporting through financial statements, that we compile the management has compiled the financial statements and report to the people charged with governance. And the other way is through reporting through MIS, management information system. So we also need to understand, is there an MIS in place or not? If you just look at the point number 7, MIS has been included here. Sixth number point, what is the authorization and reporting hierarchy in your organization? So this exactly is what I was referring to as organization chart. So since we are discussing it here, let me just show you how an organization chart looks like. See, this could be one of the example that how an organization chart looks like. MD is sitting on the top, then he has various departmental heads in place, and each department they are each departmental head is being reported by various other people. So likewise, this particular organization chart has been compiled. This is an actual case of a company. I have changed the names and all for the sake of confidentiality, but this can be a typical organization chart. So don't go into this beautiful pictures of people here. So it may be without that. That is not a problem. So this is the way the entity used to prepare its organization chart. So I've just shown it to you. Now coming to see one beauty of this organization chart. If you just if I could just detail it to you, I'll just go down 1 minute. Just show one thing to you. 1 minute. See, see, take this example. Here, if you see one question mark, you will be able to see. What does it imply? It implies that this position is vacant. This position is vacant. So through this organization chart itself, you will be able to know that where a particular in the responsibility matrix, where a particular person is missing. So this is a very critical document for the HR function, because if any of this position becomes vacant, they will have to immediately try to recruit people. What happens? This particular organization chart is an approved organization chart by the management. So this is the structure which the management has also agreed that if we operate using this organization chart, we will be able to manage our operations effectively. So this is an management approved organization chart. If any new position, if any new position comes in, this organization chart also needs to be updated. And if say for example a company is getting into expansion mode, so if they expand, then only this organization chart will get modified. So either if a new position comes, then it will be more modified, or if they are getting into some expansion and they need new people for managing that, then only modification will happen. Otherwise, for the HR, this will be the Bible. If there is any vacancy, they did not go to the management to ask whether I need to hire this person or not, because that is already in the approved organization chart. They can just go ahead and hire the person. So hope I am able to make it clear to you. Now coming back to the understanding part. Yeah. So similarly, if the company is having formal budgeting and actual tracking mechanism in place or not, whether they create capital budget, OPEX budget, all those budgets are being created there or not, and whether they compare those budgeted numbers with the actual numbers to identify where they are going wrong. Does the company receive any subsidies or concessions from the government? So in many cases, government give a lot of subsidies and concessions to organizations. So whether this particular entity is availing any subsidy or concession from the government or not. Why it is important to understand? Because as auditors, we need to see whether the company is complying with all the underlying conditions of the subsidies or concessions from the government or not. If they are not complying with the requirements which needs to be followed for availing the subsidies and concessions, then we need to report it to the concerned stakeholders. Whether the raw material has been purchased with the single vendor or multiple vendors. So this is also very important. If we are buying our material from a single vendor, that poses a significant risk. If that vendor is not able to supply us the material, then we are in soup. So that sense of risk in the process, that as auditors we need to have. The next is whether they procure material from international markets also or only from domestic market. This tells us whether custom laws will be applicable to them or not. Then whether there is any lifespan of materials purchased. If there is any shelf life of the materials purchased, then we need to see what kind of controls the company is having to ensure that none of those materials get expired. So what controls they are having in place. Similarly, input is purchased on credit or by cash. Whatever agreements they are having with the vendor for the purchase of raw material, what kind of agreements they are having. We need to take the list of those agreements, and we need to see whether there is any, say for example, a company has undertaken to a vendor that we will buy at least 5 lakh tons, at least 5,000 tons of this particular material. If we do not buy, then we will pay you penalty. So this is nothing but an operational commitment which has been given by the company, and in the financial statements we need to report operational commitments also. So as auditor, this also very becomes very important to us to understand what are the terms and conditions to the agreement. Similarly, what is the input output ratio in the production? How much input is required to achieve a particular output? So that gives a sense, that if we are procuring, say, 10,000 tons of material, so ideally we will be making, say, 5,000 tons of finished goods. If there is a significant deviation in it from our understanding when we do the audit, then we can raise questions on that. Whether they invite tender for the purchase of raw material. So many government organizations, what they do, they float tenders where people who are interested in supplying products and services, they apply to those tenders, they bid on those tenders. So that whether the company is inviting quotations through tenders or not, that they are basically, we need to understand. Then whether they have a predefined process of requisitioning of materials, whether they have delegation or predefined delegation of authority. Delegation of authority means, say, we have three expense ranges. One range is from 0 to 1 lakh. The other range is 1 lakh to 10 lakhs. And the third range is 10 lakhs to 1 crore. And the last range is 1 crore and beyond. So for each of these ranges, it's not necessary that the highest level of person will have the authorization to approve each and every voucher, each every expense. So we can, if management wants, if they find it suitable, what they can do, they can delegate that authority. Like till 1 lakh, this particular person can approve the expenses. 1 lakh to 10 lakhs, his head may be able to approve it. And above 10 lakhs, management approval is required. And beyond that, maybe people charged with governance approval is required. So basically, they can create a delegation of authority in the system to manage its operations. Then purchase committee. Does the company have a purchase committee for approval of high level procurements? What I was discussing just now. Does the company have a predefined process of evaluation of the vendors? Does the company have a predefined process for inspection of materials? So likewise, if you just run through it, you will get several questions which will give you an indication how the company is operating. Now coming to HR department also, similarly we are asking a lot of questions like, does the company have any HR manual in place, organization chart in place, whether they are having any grading system or not, they are using their own labor or they are also resorting to contractor labor, whether they have permanent and temporary employees as well, PF applicable or not. So all these kind of questions we can ask from the HR department, which will give us a fair understanding about the operations of the entity. So I'm not going to each and every item in detail because it will take a lot of time because we are already short on time. So I want to cover most critical aspects to the extent possible. So similarly, current assets and liabilities for statutory compliances, what all laws and regulations are applicable. And then miscellaneous, like whether they have any byproducts or scrap which is generated through the process, whether how they dispose of the byproduct or scrap. So these kind of questions we can ask to have a detailed entity understanding. So after doing this, what we will do is, now we have, say in this particular example, we have understood the business, we have understood it at macro level, that how it is operating. Now based on this, we will have to create one entity level controls risk control matrix for entity level controls. Yesterday also I explained what are entity level controls. Entity level controls are those controls which are like how the management, how the people charged with governance is managing the entity. So that is a high level control. So to assess those high level controls, we need to create one risk control matrix as well. I'll just show you an example of it. If you see what kind of risks we have identified in this particular case. First risk, you can just read through it, lack of participation by the management and people charged with governance. Say, for example, management has been entrusted to manage the operations of the company, but they are not devoting sufficient time and they have delegated all their work to the lower level. So their level of expertise and their level of management and their level of thought, which is required for running the business operations smoothly, that is lacking. So for this, what control they are having, just read through this control. The company has formed various committees to oversee and exercise high level controls and to actively participate in critical policy decisions. So basically, for this purpose, what they have done, what is the mitigating control? They have created various committees to oversee each of the functions. So this is a fair control which they have implemented. And whether this is a preventive control or detective control, it is both. Because these committees take update on what is happening in the company, what are the operational challenges, what are the financial challenges, so that prevents lot of potential issues. And also whatever has happened, whatever wrong has happened, already happened in the organization, if anything as such is there, so they also understand how it has happened. So that is called as detective control. So this particular aspect, both preventive and detective, may be there. Similarly, if you just look at the other risk, what is there? Inadequate policies and procedures resulting in inefficient conduct of business. So policy itself is faulty, or maybe policies, certain policies are not there in place. So that can be another risk. So what kind of control they have identified there, or they are mitigating control they have exercised there? The company has framed various policies, procedures, codes, manuals, guidelines, etc., in order to conduct business in orderly and efficient manner. So what they are saying that we have all the policies in place. Now, as auditors, it's our responsibility to see that any policy which is required by the statute, whether that is in place or not, and if we feel or if we assess that a particular policy is important from the perspective of this organization, but that is not in the place, that also we need to identify as our observation. Similarly, lack of awareness among employees about the company's policies and procedures. See, this is a very, very practical and prevalent problem. What happens in business organizations? They have a lot of policies in place, but if we have a policy in place, what is more important is to percolate awareness of that policy. And how it happens? That happens through trainings, workshops, through those initiatives it can happen. If the entity has not ensured that that awareness has been uh, percolated throughout the operational segments, then this challenge will remain. So this is also a significant risk, and this is a very, very practical issue which we face in day in, day out. Here, what control they are saying, the company ensures that the employees remain aware of the company's policies and procedures. Towards this objective, the company has hosted critical policies on its website, displays critical policies in all its offices. Regular mails are sent to employees for changes in policies, if any. Training programs are conducted to make the employees aware of those policies and procedures. So this is the control which they are having. Similarly, next risk, indifferent attitude of management towards statutory compliance. So what it is indicating to? It is indicating to the tone of the management at the top. What is the tone? If management is serious about compliances, that will percolate down even to the junior level. But if they themselves are not very serious about compliances, then God knows what will happen. So this again is a very, very practical example. In promoter driven companies, this particular issue is very, very prevalent. Let me tell you, day in, day out, we see this. Next is inadequate measures towards safeguarding of companies' assets. This we have already discussed. So what kind of insurance they are having? They are ensuring that title deeds are there. So all those things what we discussed earlier, all those things they have ensured here. Then GITC, General IT Controls, this we will discuss separately in a separate document. You will get a fair understanding of it. Inadequate budgeting process, but they are saying that we have capital and revenue budget in place, and we do compare it with the actuals on a periodical basis. So this control they are exercising, and this is being and they are saying that this is being reported to the management also as part of the MIS and financial reporting process. Similarly, one more risk is there, inadequate management reporting process, so that MIS process itself may be faulty, or that may be inadequate. So the company has different sets of reporting requirements, both internal and external. For that, they have given a comprehensive list to us that these are the processes which are in place. The internal audit system not commensurate to the nature and size of the business. So internal audit is very critical for a company, since this company is a listed company. For a company of this size, definitely internal audit is required, and that gives lot of comfort to the management and to the people charged with governance, and more so it gives lot of comfort to the auditors also. So this is just an example of what risk control matrix looks like if we prepare it for entity level controls. So till now, anyone is having any questions? I'm just pausing it for 1 minute to see if anyone is having any question. Ankita, if anyone is having any question, you can please drop it in the chat box.
Okay, sir, let me check.
Yeah, please check, because we will be moving to the another segment.
No queries.
No queries. Okay, so let me move ahead. Friends, I hope that you guys are focusing on this presentation, because let me tell you, this is going to help you significantly even in your studies. When you give your final examination, or maybe if you I was informed that there are few people who are in CA Inter as well, so you will gain big time when you will get to know why I'm saying this. When we go back to the theory after looking at all these things, all practical aspects, you will see that you are understanding most of the things without me explaining that to you. So focus on this. I'm telling you, this is very, very important. And in an audit process, this is the heart of the audit: risk assessment procedures and internal control evaluation. So please focus on it. Don't digress. Now, coming to our next step, which I want to show you. So we talked a lot about materiality, right? So if you remember that we in the last session we discussed about risk of material misstatement. When we talk about audit risk, it signifies that we are talking about risk of material misstatement. So in risk of material misstatement, that material term, how do we define what is material, what is not? Theoretically, you must have read that if from an auditor's perspective, when they are reporting to the stakeholders, if something that may influence the decisions of the stakeholders, then it becomes material. It's not necessary that it has to be an amount or a numerical figure. It may be a disclosure. It may be a significant control lacuna, which is material, right? So materiality may have different forms, but when we undertake our audit procedures, we have to give it a number, because that will be the materiality based on which all our sample testing will be dependent, or the sample size will be dependent on that. Whatever observations we come across in course of the audit, what will be its implication, whether that is material or not, that will be compared with that amount. So understanding how do we compute materiality is of utmost importance. Now let me just take you through how we compute materiality. So materiality, for computing materiality, what is the first step? The first step is to identify the benchmark. If you see this word here in row number 20, hope everyone is able to see it, benchmark to be considered for materiality. So this is the first step. So what does this benchmark imply? So there are certain key elements in a financial statement. It may be gross profit, it may be net profit, shareholders equity, gross revenue, total assets. It may be other aspects like fixed assets also in certain cases. Say an entity which has been operating for a very long period. So the most consistent factor in that entity will be its revenues and its profits. Most consistent factor. But if a company has just started a few years back, a couple of years back, so we don't have the understanding that whether its revenues or its profits are consistent or not, because we don't have the significant historical data. So in that case, and maybe in 2 years time the company has not achieved its potential, what it could have achieved, so it is running in losses. Maybe 2 years 3 years down the line it will start earning profits, it will be doing more revenues. If we take example of e-commerce players in of Flipkart, or maybe Zepto, or maybe Swiggy, so all these e-commerce players, majority of it, if you see, they are burning cash, they are incurring huge losses, but still they hold huge valuation. Why? Because valuation is totally dependent on the future. What is the future that this particular company holds? Based on that, valuation is derived. So these are the key elements. These may be the key elements in a financial statement. So first you need to identify which are the key elements in these financial statements. Say for example, in this particular case, we have identified that these are the 5 key elements which are there in the financial statements. When and how do we identify these key elements? Based on its significance from the financial statements perspective. Say for example, if you refer to the profit and loss account, gross revenue is one of the critical factors. Similarly, gross profit and net profit may be the significant factor by its nature also and by quantum also, right? So similarly, you need to identify which are the key elements in these financial statements. Once we have identified the key elements, now we need to see which is the most consistent factor in this particular company, which has been the most consistent element, which has a pattern. So if you see revenue, take example of revenue. What happens in the 3 years back, the revenue was say uh, 50 crores. In the next year, it increased to 55 crores. In the present year, it increased to 65 crores, or maybe it reduced to 50 crores, whatever be the case. But generally, we see that revenue or the corresponding profits are consistent factors for the companies which have been operating for quite some time now, right? So in that particular case, what we can do, we can consider either revenue as the benchmark, or net profit or gross profit as the benchmark. So in this particular case, revenue from operation, if you see in row number 15, just read it through what is written in row number 11. As the company is currently in losses, we have not considered the profit or loss for the period as a benchmark. We took sales as our benchmark for the current audit plan. So sales has been considered as a benchmark here, where historical figures have been considered here. 23 balance as on 23 and balance as on 24. So benchmark here is for 24 is 14 crore 4 lakhs, which has been considered as the benchmark for materiality. And for 25 it is 19 crore 13 lakhs, right? Now, what is the overall materiality? How do we compute it? Financial level overall materiality. So here we have to apply certain percentage to it, percentage to the benchmark to compute it. So if we consider revenue, so generally you have to keep your overall materiality maximum up to 5%. Generally this is practical and it all depends on your judgment. There is no yardstick which has been given, but this is a generally if you see what auditors consider, auditor considers maximum 5% of revenues for overall materiality. 5% of revenue. In present case, considering our assessment of the internal controls which are there in the organization, since we have already understood the macro level controls in the organization, so based on that we assess that 2% of the revenue can be considered as overall materiality. how does it uh, how does it make a difference? Lower the materiality, higher will be the number of samples. Lower the materiality, higher will be the number of samples. Higher the materiality, lower will be the number of samples. So our audit procedures with respect to test of details gets significantly reduced if materiality is high. And even in course of audit, if we come across any observations which can be quantified, if materiality is high, then we can do away with those observations. But if materiality is low, so in that case there is a high chance that certain observations may surpass that materiality figure. So please keep it in mind, lower the materiality, higher will be the sampling. Higher the materiality, lower will be the sampling. If I would have taken 5% here, then it would have reduced my audit procedures. But in this case, since I have taken it 2%, so my audit procedures will be higher than as it would have been the case if it was 5%. So when we compute overall materiality, then what next we compute is performance materiality. I'll just give you an example, practical day-to-day example I'll give you. You'll be able to connect it better. What happens, say I have to take a flight in the morning. Next morning I have to take a flight. So my flight time is say 7 a.m. in the morning. I will have to reach the airport maybe 1 hour before. So I have to reach the airport by 6. And my distance from my home is half an hour. So effectively, if I want to reach airport on time, I will have to leave my home by 5:30. Latest by 5:30 to comfortably reach to the airport on time. But still what we do, still we try to leave a bit early, maybe 5 or 5:15. And to leave at 5 or 5:15, we put an alarm of say 4 o'clock in the morning to get ready and for the daily chores. So if we are putting the alarm of 4 o'clock, we don't put one alarm, even we put two alarms many a times. कि चलो यार, let us put one alarm at 3:45 and one alarm at 4 o'clock so that I do not miss that timeline, right? So performance maturity is exactly the same. Overall maturity, if my misstatements, expected misstatements, aggregate of my expected misstatements, say for example, I have got certain misstatements in inventory of say 5 lakh rupees, in debtors of 5 lakh rupees, and in say for example in sales of 5 lakh rupees. So together, what is the quantum? Together it is 15 lakhs. Say if we triple all these amounts, what will happen? The total becomes 15 to 45, which is exceeding this materiality value, what we have computed here. So we want to put an alarm before it reaches that level, because that will be the level where I need to think whether I need to qualify my report, or I need to give an adverse opinion. Whatever be the case, that is totally dependent on the auditor's judgment. But materiality, in no case materiality has to be surpassed. So If it is surpassing the maturity, so definitely it's risky for auditor, and he has to take a decision to report to the concerned stakeholders. So performance maturity in this case, we have taken 90% of 2%. 90% of the maturity figure that we have considered here as performance maturity. This maybe, if you want to be more conservative, you can take it as 75%. If you want to be even more conservative, you can take it even 50%. It all depends on your judgment, what kind of comfort or cushion you want to keep with you. Now, lastly, you will see trivial maturity. It is a transaction level maturity. See, the first one maturity was financial level. The second performance maturity was for account level maturity. And the third is transaction level. So at transaction level, if I have come across certain observation where the quantum is of more than 1.4 lakhs, then I have to consider it as material and I will have to report it. So trivial maturity is nothing. It is otherwise also called as clearly trivial threshold, CTT. So it is a transaction level maturity. What we have fixed that beyond, if a maturity, if say for example, if a misstatement exceeds this 1.4 lakhs, that misstatement we will have to consider it as an uncorrected misstatement for aggregating with other misstatement to see that in aggregate that does not exceed my performance maturity, and in any case it should not exceed the overall maturity. If it exceeds, then definitely it calls for a qualification, it calls for an adverse opinion, as the case may be, based on the judgment of the auditor. So this is how we compute maturity. Now, so till now anyone is having any question, or should I move ahead? Ankita, can you
Sir,
just
I
check
have
any
forwarded
questions?
you on the Zoom chat.
Okay, let me just check it once. Yeah, sir, only blank Excel file is on the screen. So, Ankita, was that Excel file not visible?
No, sir, it was visible.
So someone is saying that that blank Excel file he could see. Maybe some problem he is having at his end.
Yeah, maybe it was at the
Yeah.
starting.
Oh, maybe possible.
Yeah.
Then how to identify controls for any kind of risk? See, identification of controls starts from inquiry with the concerned process owner. When you have identified a risk, that this is the risk, then as auditors we generally know that what mitigating control should be there, what standard control, because see, every a risk has a standard control generally. Definitely the entity may have a customized control, we will definitely assess that, but generally, say for example, yesterday in the last session also, the example which I gave, bank reconciliation statement, if we want bank to be updated at all times, if we want that BRS is prepared effectively, what we did there, we had one maker checker control, that one person is making it, preparing it, and the other person is reviewing it. So that control is a standard control. So similarly, if we are identifying any risk, we need to inquire from the concerned process owner to understand that how he is mitigating this risk. So whatever response he is giving, that we have to corroborate with the underlying documents and records to see that whether whatever he is saying is actually happening on the ground or not. So that is how we identify controls against corresponding risks. Hope I am clear to you now. Now, in the earlier discussed material procurement example, if the vendor and purchase manager collide and internal control fail and are purchased at high prices, in such a case there exists a fraud in entity, but the financial statements are not misstated. In such a case, what will be the audit report, unmodified or qualified? Okay. So this is a very, very good question, I must say. BF something I can see here, so I'm not aware what name you exactly have. So see, here, what is the case? The example which you gave, that collision between the purchase manager and the vendor. And this is very, very prevalent. This is very, very practical. It happens. I can say you that I can very confidently tell you that out of 100, maybe 50 organizations are facing this issue. So this is a very, very general issue which is there, which exists. So if the management has come across any such fraud or any instance of such fraud, if and that may be external also, that may be internal also, in your case this is a combination of external and internal. So basically it's an internal fraud with connivance with the external person. This is happening, right? So in this particular case, when fraud has been identified by the management and it has been reported to us, that is one case. And the other case is when we as auditors have identified that there is a fraud. So both situations may happen. Whatever be the situation, fraud is always a significant risk for auditors. And you are aware or you are not aware, I'm not sure, but there is one CARO reporting for auditors. Companies Auditors Report Order, CARO. So in CARO, there is a specific disclosure we have to make as auditors that whether any fraud has happened in the organization during the year or not. If anything as such we have come across, we have to anyways report it in CARO. And if the quantum of fraud is so significant that it should form part of the main audit report also, it needs qualification, it needs adverse opinion. Maybe management did not divulge, even though the management was aware of that fraud, but they did not share that information with us. And we get to know about that from external sources or through our procedures. So in that case, it's on the judgment of the auditor whether he wants to report it in the main audit report as a qualification or not. Or even he can decide to withdraw from the engagement. It all depends on the judgment of the auditor. But hope whatever query you have asked, I have clarified it to you. So only this query, these queries, Ankita, no more queries?
No, sir.
Okay, so we are moving ahead now.
One more query I'm forwarding you.
Yeah, please forward. Sir, as you said, few companies are burning cash and still they will have be highly valued in future. How will this impact in our audit area? You mean while deciding key factor elements, right, sir? Yes. See, as auditors, we need to comment on whether the entity is a going concern or not. If you refer to the audit report format, we need to report on going concern aspect as well. If a company is burning cash regularly, so we definitely ask for the cash flow projections or the going concern. So basically cash flow projections or business projections, which would establish that even though the company is burning cash now, they still hold value, its asset, whatever is there in their financial statements, that holds value what they are signifying. So assessing going concern through obtaining business projections and also based on the industry events what have happened, based on the assessment of experts we have, if we have received any, or maybe if those are there in the public domain or in public publications. So all those we need to refer to and see whether this particular industry is actually in soup, or it is just that they want to enhance their market share, or they just want to enhance their consumer base so as to enhance their valuation. So cash burning happens as part of competition as well. If you see now, there are Swiggy, there is Zepto, there is Flipkart Minutes. If you buy a particular product from any of those portals, we generally see all the three that which is offering which product at the most affordable price. So then we buy it from it. So what is important for them to enhance the customer base, to retain their customers. That is important, and for that they have to burn cash. So investors have the perspective, future perspective, that in future, because that is a huge intangible valuation. When we talk about customer base, it carries huge intangible valuation. So investors perspective is different. They see what value it carries. If it carries intangible value, they pay for it. There is no problem at all. So as auditors, we need to see, we need to understand the dynamics of it, of the industry, dynamics of the business. Then we need to decide what impact it could have on our audit, and accordingly decide on whether it is a key factor element or not for the purpose of computing our materiality or not. Now, one more, would you please show all the headings of your Excel sheet, sir? We are curious to develop this kind of checklist on our end. Headings of which one? Because there are a lot of tabs there. So which particular tab you are referring to? Because I showed you RCM also. I showed you other documents as well. But which particular document you are referring to? Please clarify that. I will show it to you again. And anyways, be rest assured, this particular sample set I have prepared for you all. I'll be sharing it with the board of studies, and I'm sure that they can share it with you as well. So you not note everything now. I will share this document with you. Don't worry about that. Now coming back to my document. Now we have, so based on the overall understanding, after we are, and as part of the planning, we have created the maturity also. This could be one sample audit plan, which we can hope Excel is visible, right? My Excel is visible,
Yes,
Ankita?
yes, sir. Yes, sir.
Yeah, okay. Thank you. So if you see this Excel sheet, what work we have to undertake in each of the areas, whether it be opening balance testing, whether it be trial review, vouching of expenses, variance analysis, which is a part of analytical procedures, related parties, financial ratios, segment reporting, shareholder funds, long-term provisions and short-term provisions, short-term borrowings. So every element in financial statements, against that, we have identified that what all work we have to do based on the understanding we created of the entity, of the industry, and the materiality and the clearly trivial threshold what we have created in the previous document. So based on that, we decide on what is material, what is not material. If a particular item, say a particular item is below this 1,40,000 trivial materiality, one line item in trial balance is below 1,40,000. So in that case, we can plan to leave it out from our audit procedure because it is below our trivial materiality. So we did not mug our heads on petty items. Rather, we should spend more time on items which are more important from the financial statements perspective. In this particular item, say for example, one particular item in the trial balance carries a balance of 1 lakh. So in 1 lakh, say you come across an observation of 10% of 1 lakh. The quantum is only 10,000. So, do you think that it will result in a material thing for you? Now, one contention may come up that such misstatements are there in across the financial statements. So that may become material. That is the reason why we have kept that cushion from overall materiality to performance materiality of 10%, 25%, or 50%, as the case may be, as decided by the auditor based on his judgment. So if any particular line item in the trial balance that is below the trivial materiality, you can leave it out unless and until that particular item is a statutory liability. That particular item is a legal expense because it may have a significant implication. Say 1 lakh fee has been paid to a lawyer, but the company has not disclosed any litigation to us. So that particular 1 lakh expense can lead you to much bigger things. So we need to identify that there are certain items in trial balances where focus testing is required, which is irrespective of the amount. We need to thoroughly check it. It may be a statutory compliance related thing, or it may be a legal expense. There may be such other items as well, but these two generally we do focus testing on. Now coming back to audit plan. So this is the way we create an audit plan. Here if you see the headings, type, serial number, heads, what are the headings, area of work, details of the work, person in charge who will prepare it, status, date, person in charge review, and auditor's remarks. So this is for us, that who will do this area, who will audit this area, who will be auditing this area, who will be the preparer in this case. We will capture their names, and we will also capture the names of the people who will be reviewing it, and we will also capture the status of the work process. Now what is our audit plan? Similarly, based on this audit plan, since we have devised the audit plan now, based on that, we create a requisition list which we share with the client. That this is the preliminary requirement list which we are sharing with you before the start of the audit. So once we receive this data from you, then we will be able to start audit of that particular area. So we generally obtain the dates from them, that why by when you will be able to provide us this data. And this particular acquisition sheet list has been entirely prepared based on the audit plan and also based on the initial understanding which we have gathered of the entity. So here also if you see, in the similar line we have created the requirements, that what all documents we would need. I'm just taking an example. I'll just take an example here. Say, for example, trade payables. So, what all information we have asked? This is mind it. This is a preliminary acquisition list. In course of audit, we can forward more of the requirements to the client when we come across certain things. But this is a preliminary requirement list. So MSME parties list, creditors aging, mail IDs of the sample selected for sending confirmation requests to them. So we need external confirmations from the parties. For that, we would need mail IDs of the parties. So samples which we have selected, for that we would need external confirmations. And for that, we need to send mails to them. For that, we are asking for mail IDs of those parties. Then in case of debit closing balance, DPT3 filed. This is just an indicative example. There may be a lot of other requirements. I just want to show that these are the kind of requirements which we can ask from the client. This is not an exhaustive list. Lot of items can be added to this based on the understanding of the entity. Now coming to the next document which I would like to show you. This yesterday I had already showed you what an SOP looks like, so I'm not going into it again. But for your reference purposes, I have included it as part of the sample set. This SIPOC chart, source, input, process, output, and consumer. This also we had discussed at length in the last session, so I'm not going on it again. In case you have come across any query on that, you can ask me. So this is also a part of the sample set. You can go through it once you get this document. This also we have seen the process flow chart. P2P RCM, the structure we had seen. Today what we can do, we can try to address one risk practically, that we will just identify one risk, what standard control should be there against that risk. You can share your views on that, and I'll say whether you are thinking in the right direction, or in case I have to add anything to it, I will definitely add to it. So we will come back to this sheet again. Yeah, see. So based on the risk control matrix, yesterday in the last session, what we were discussing, this sheet here, if you see, we had written to be implemented to be implemented and actual process, what all observations we had identified. So based on that, it is not directly linked to the previous sheet, but it is just an example then that how one RCM finding sheet can be prepared. So while working on RCM, if we have come across any risks which are not there in the RCM, or maybe some risk has been identified but the corresponding control is inadequate, or corresponding control is absent, or in case the risk categorization of that risk in the RCM sheet, if that is wrong, that those kind of observations we are capturing in one sheet. And what we are doing here, here is our observation heading, then observation, what was the risk rating, it is a control risk or not, and its implication, what will be its implication on the organization, and what recommendation we can give to them. See, as statutory auditors, we may think that why we are going to recommend them what kind of uh, uh, controls you should have. So this is the job of the internal auditors, why we should do this. So see, the audit nowadays, it's a risk based audit, and people have a lot of expectations from us. If we are able to add some value, if we have come across something and we can recommend better processes, best practices to them, so that definitely we should do, even as statutory auditors. It's not necessary that we need to be internal auditors to do that. As statutory auditors also, if certain recommendations can be given, we should give, but definitely keeping the independence in our mind. We cannot give any such recommendation to them which may impact our independence, which may impact our ethics. We cannot tell them that you can settle something under the table with any department. We cannot give those kinds of recommendations for sure. The recommendations should be as per the uh, ethics which has been communicated to us by ICAI through Code of Ethics. We cannot surpass that in any case, and but there is no harm in adding value to the client. Now coming to, if I will just go through one particular observation so that we understand the flow how it works. This is the case of procure to pay. Audit area is SOP. Observation heading is unapproved SOP. What is the observation? The observation is the SOP for the P2P process has been prepared. However, it has not yet been circulated and signed by the management for review and approval. So see, they have SOP in place, but that has not yet been approved by the management and that has not been circulated to the concerned process owners. Is that control sufficient? Will that ensure proper exercise of the control? No, not at all. Unless and until an SOP has been approved by the management, as auditors, we cannot accept that SOP. And even the process owners, those process owners will not accept unless and until that has been communicated by the management to them. And again, that awareness has not been created about the SOP by the management to the concerned process owners. So that is again a lacuna in this. So risk rating has been categorized as high. What is its implication? Unapproved SOP may result in inconsistency in operating decisions and increased risk of errors. And the recommendation which we have given, the SOP shall be approved by the management and circulated among the entire team. So this is the kind of, there may be variances in the formats, reporting format. There is no problem at all. This is just an indicative format which you can use. You can definitely customize it for betterment. Improvisation has no limits. Now I'm taking you to next document. So this is also very important document. this is, I know that we are running short of time. So since we are taking questions intermittently, so we will keep only 10 minutes, last 10 minutes for the question answer session, if you have any. And rest of the time I would like to spend here on explaining you the things. Now control design gap and control testing. Here if you see what we have captured the process, we have captured the control. And here what we are doing, we are questioning or we are assessing the design of the control, whether control has been designed effectively or not. The example, just try to recollect the example of BRS. Imagine a case where there is only BRS preparation aspect and there is no review aspect. So do you think there is the design of the control is okay? A purchase order shall be issued by the person who is raising the requisition. The person who is raising the requisition, he himself is issuing the purchase order. So that result in conflict of duty. So is that a proper design of control? No. So whatever control controls the company is having in place, even those controls needs to be assessed from design perspective. So what is the perspective through from which we need to see it? The first is appropriateness, considering the significance of risk, whether this control itself is appropriate considering the significance of risk. Say if risk is high, risk is moderate, or a risk is low. Accordingly, the company should devise the control. So here if we just read through one, this control comprise of issue requisition, preparation of issue requisition, approval by the head, submission of requisition to the stores department. So this is the design from design appropriateness. This assessment we have done, and in case we have any observation even on this, we need to consider it in our control testing results. Then second is competence and authority of the person performing the control, whether the person who is performing that control is competent enough to exercise that control or not. If not, then we need to observe. The next is frequency and consistency. At what frequency it is happening? Say BRS is being made only on an annual basis, but we feel as an auditor that it should be done on a monthly basis, considering the size and nature of the entity. Then why it is being done on annual basis? So that may be an observation which we can make and which we have to consider in our control testing results. Then level of aggregation and predictability. So basically what level of aggregation it covers. If you just read through it, this control is exercised at lowest level of aggregation as it covers each and every issue requisition. This helps in predicting the requirement of the material at departmental level with high level of predictability. What does it mean? It means that this control is being exercised at a transaction level, at every requisition level. So if there are errors, so at transaction level itself we will be able to identify it. So that's the design of the control, and level of aggregation is very low in this case. It's not very high. If there was a case that the company was preparing BRS statement only once a year, so level of aggregation, one transaction, one such activity equals the level of aggregation. So that in that particular case, the level of aggregation would have been very high. So ideally, if that is the case, then that compromises with predictability of the issue, of the risk. Then criteria for investigation and follow-up. The company does not allow any deviation in the predefined process of issuing an issue requisition. Deviations, if any, are investigated and timely followed up. Then dependency on other controls or information. So this is the, if you remember, in the last session we discussed about primary key controls and non-key controls. So this may be the key control, but if any associated non-key controls are there, we are assessing that dependency on those controls. IP is nothing but it is information produced by entity. Whatever information has been provided to us by the entity, that we are covering here. Then if we have identified any design gap after doing all this, after understanding everything, then we need to identify it here. In this particular case, we did not find any design gap. Then testing, DNI testing reference. So basically this design is okay, but now we have to see whether this particular control is implemented or not. For that we do sample testing. Sample testing sheet I will be showing to you separately. And once a particular process, a particular controls design and implementation has been tested, and we found no major observations in it, then the next step is we do operating effectiveness testing of that control throughout the period. We need to see that whether that particular control has been effective throughout the year or not. So in case of DNI, even if we check one sample for each process, that is sufficient. But for operating effectiveness testing, we need to cover the whole period. So number of samples could increase. Maybe we can pick up one sample from April, the other from July, the other from December, and the last one from March. So that will ensure that our sample set is spread throughout the period. If there are any findings and observations, we need to capture here. If any remediation plan is there, that remediation plan we need to capture here, that how, in case there are any control lacuna, in case there is any design fault or any implementation fault or effectiveness fault, those remediation plan have to be captured here, responsibility have to be fixed, and timelines have to be captured. This particular last three columns, generally it is for the client to have, but as auditors, even if we have it, there is no harm in having it. Now coming to just now what we discussed, design and implementation testing. Just see, there is one purchase requisition. From here it starts from purchase requisition. We check name of the user department, what item was required, quantity, whether it is approved or not, then who has approved it, final approval has been availed or not, note sheet has been prepared for justifying the requirement of that item or not, then whether rates have been finalized with the approved vendor or not, who has, how many quotations have been, no, purchase order has been issued or not, whether that has been approved or not. So all these aspects, right from purchase requisition till the receipt of material. If you see, now we are in just see, we are in comparative analysis of quotations phase, then we are into PO phase, then we are into GRN phase when goods have been received after purchase order, then material inspection phase, then invoice receipt phase, and then finally, if any observations we have, we capture those observations. So this is the process through which we do DNI testing. Actually whatever design of the control was there, that has been implemented or not. At each of the level, we need to see whether that has been approved by the concerned department or not. Whatever process flow we have understood, whether the process is actually being undertaken in the same process or not. So that is seen through DNI testing. Now coming to operating effectiveness testing, you can see that here number of samples are much higher. We have here tested 25 samples for the year to ensure that this particular control is effective throughout the year or not. So here what we are doing, we are not doing as detailed testing as we have done in DNI testing, because in through DNI testing, we have ensured that process is in place, but now we are just ensuring that whether effectiveness is there in the process or not. So here what we have done, in our testing, we have seen that department head has approved it or not, requisition was there in place or not, whether PO was issued or not, it was approved or not, GRN was there or not. But the extent of testing, what we are doing here, and the extent of DNI testing, those are different. In DNI, we do very, very detailed testing. At each sub process level, we have to check what has been documented, has been implemented or not. But in OE testing, the primary objective is to ensure that the process is being followed in its spirit or not. So this is about DNI testing. This sample case study if we, I don't think we will have much time. This you can do subsequently on your own, because we will not have much time, because we need to run through the theory part. We need to connect everything what we have understood till now through this practical application with the theory. So we will now move to the presentation. In case you have any queries, I will devote 2 minutes for addressing your queries. Please come up with your queries if you have any. Ankita, in case they have any queries, you can just post it here.
Sure, sir.
Sir, in the era of AI, where 100% audit is payable, still we have to adhere to the trivial materiality. This is a very good question again. See, as I discussed in the last session, AI has not been used by all the firms, that has not been put in practice by all the firms till now. So it will take time. What you are saying is absolutely correct. Not only AI, even continuous audit process is in place now. A lot of big four firms are using it. Continuous audit, what happens? They put a patch on the accounting software of the company, and with certain parameters. Definitely that uses AI, and that particular patch keeps on identifying exceptions from the system on a routine basis. So even if you are not auditing, that patch is auditing for you. So that is a continuous audit process. So continuous audit also has started by few firms, and but AI till now is new to our profession. We have not embodied it in our process yet. It will take time, but yes, when AI will come effectively, it is being used by the firms, then definitely 100% audit will be possible. But still, a lot of auditor judgment would be required in certain cases. But yes, uh, if we implement AI, then definitely audit sampling may go off. Even I am an avid believer of that, that this sampling thing should go off as soon as possible. But that is not possible unless and until all the firms are on the same page. And maybe ICI itself is taking a lot of steps to uh, bring it in regular practice of practitioners. But let's see how fast it happens. Okay, any other questions, Ankita? No, na? Ankita, any other questions? Am I audible? Right, okay. So I'm coming back to my presentation. Now what we will do, we will just try to connect whatever we studied practically. The first, we were here in this slide. Control environment basically refers to entity level controls, which we discussed in detail. Risk assessment is identification of potential business risks. This also we have discussed at length. Control activities, we have understood against every risk there has to be a mitigating control. Control may be a key control and associated non-key controls as well. Information systems, the accounting software or the other software, other operational softwares, whatever the entity is using. So that we need to understand. We need to understand the general IT controls, that what general IT controls the entity is following. Then we need to monitor those controls. How monitoring happens? The company has internal audit function in place, a revenue assurance department in place for monitoring whether those controls are exercised effectively or not. This is the components of internal controls. How to evaluate IC internal controls? First, design effectiveness assessment. This we have discussed just now. Identifying control deficiencies. I have shown you a few examples also. And evaluate operating effectiveness, whether controls have been functioning in the entity and whether those were functioning throughout the period or not. Now coming to essays with risk assessment and IC evaluation. So these essays you will have to read yourself, because I don't have so much time to cover each and every essay in detail. But whatever we have studied till now you'll be able to easily connect with everything what is there in the essay. So primary essays for risk assessment and internal control evaluation are SA 315 and SA 320, and there are other associated standards on auditing, which refers to risk assessment and internal control evaluation are 300, 330, and 230. 315, I have given a summary here, but most of it you will be able to understand by yourself. Like understanding, I'll just run through it fast. The objective of this essay is clearly stated in its name itself, and the auditor shall obtain an understanding of the following relevant industry, regulatory framework, and other external factors, including the applicable financial reporting framework. When we say financial reporting framework, it means whether the entity is following AS or IND AS or any special reporting framework as may be required by the entities which are governed by, say, RBI or SEBI or IRDA. If they are required to follow certain reporting framework, they will have to follow that. The nature of the entity. While understanding the nature of the entity, we need to understand its operations, its ownership and governance structures, which we have discussed at length, the types of investments that the entity is making and plans to make, and the way that the entity is structured. What is its shareholding pattern, its debt pattern, and how it is financed. The entity selection and application of accounting policies, including the reasons for changes. We need to see the whatever accounting policies the entity has selected and whatever it has applied, whether that is in consonance with the underlying accounting standards or not. The entity's objectives and strategies and those related business risks. What are the entities strategies? So basically, when we gathered the high level understanding, we understand the existing the business strategy. Say for example, we just some time back we discussed about e-commerce players. So they have certain strategy, even though they are burning cash, but they have certain strategy through which they are ensuring their valuation. So we need to understand the strategy of the management and what are the related business risks, the measurement and review of the entity's financial performance. So we also need to do comparison of the current year financial statements with the past year financial statements to see what are the major variances which have come in. So as to identify the focus areas. The auditor shall obtain an understanding of internal control. This we have discussed at length. Now, identification and assessment of risk of material statement due to fraud. This fraud aspect also we have covered, that fraud is always a significant risk and it has to be taken care of by the auditor very, very seriously. If at all required, then as per Companies Act, there are certain frauds which needs to be reported to the central government as well. So we need to see whether any of such fraud is eligible to be, is liable to be uh, uh, reported to the government or not. Responses to the assessed ROM due to fraud. So what responses we need to give, we need to apply in our process. The auditor shall assign and supervise personnel. So definitely we will depute our team, evaluate the selection and application of accounting policies, and incorporate element of unpredictability in selecting audit procedures. When we say we want to incorporate element of unpredictability, what we can do surprise physical verification of, say for example, cash or their inventory or fixed asset. That surprise element we can put in. We can uh, uh, even if a what auditor wants, they can actually uh, communicate with the bankers also, that what kind of review they have of the entity, whether they are complying with all the debt covenants or not. So even that thing we can do as a surprise element. There is one case study. So you, this is a very simple case study, so you can easily solve it on your own. So I'm not spending time on this because there's a lot to cover in the next 10-15 minutes. Essay 320, materiality, we have already discussed. I'll just read through it once. Misstatements, including omissions, are considered to be material if they individually or in the aggregate could reasonably be expected to influence the economic decisions of users taken on the basis of financial statements. It means that We need to see individual level material misstatements, and in aggregate, it should not exceed the overall materiality in any case. Determining materiality involves exercise of professional judgment, and so basically these are the auditor's duties: overall audit strategy establishment and determining the materiality for the financial statement as a whole, materiality level for specific transaction level materiality, and performance materiality. So these three materiality we need to determine. So basically, whatever we saw practically, you can see here in theory as well. Performance materiality, the amount set by auditor at less than materiality. So there in our example, we had taken it as 90% of the materiality figure to reduce and to an appropriately low level the probability that the aggregate of the uncorrected and undetected misstatement exceeds materiality of the financial statement as a whole. So basically performance materiality acts for us as a cushion. Uses and basis of materiality: to determine nature, timing and extent of risk assessment procedures, to identify the risk of material misstatement, and to determine the nature, timing, and extent of further audit procedures. So, when we say further audit procedures, after controls testing, we devise our further audit procedures, that what all we need to cover as part of our substantive procedures. In substantive procedures, you must be aware that there are two types through which we can do substantive testing. One is test of details, which indicates towards sampling, and the other is analytical procedures, where we look into trends and variances, and we build expectations. We try to create plausible relationships between uh, one or more financial or non-financial data. Basis of maturity, size and amount, that definitely is one criteria, as we had taken the benchmark as revenue. So it has significant size also, and it has significant amount also. The nature of information and legal requirement, and qualitative maturity, since revenue in itself is a significant risk, and that is the most consistent factor in any organization. That's the reason why we took it as a benchmark, and we considered it for the purpose of computation of maturity. Use of benchmark, this we have discussed in detail, so I'm not going into it again. So you can just go through it on your own. You will easily understand everything. Essay 300, planning and audit of financial statements. We have discussed this also at length: understanding entity and business, identifying risk areas, and evaluation of internal controls. Auditors' response to assessed risks. So what are the responses? The first is we need to design our audit procedures based on the risks identified. Then we need to test internal controls, and based on that, we need to devise further audit procedures, which in other words is called substantive procedures. And accordingly, then finally, we report based on that, whatever conclusions or results we arrived at. Steps of internal control evaluation and risk assessment. So these are the steps. It starts with risk assessment, then design and implementation, evaluation, controls testing, controls understanding, risk identification. No, sorry, it's other way around actually. It starts with entity understanding, then controls understanding, risk identification, design and implementation, controls testing, risk assessment, and then finally it in turn becomes our audit response to the assessed risks. So this I don't think is important to be covered. It is just understanding internal control system, risk of material misstatement, the same thing. See here, one thing I would like to cover. I'm just trying to cover the important things which we haven't discussed yet. Identification of risk of material misstatement. In this, if you see the bottom right one, focus on complex transactions, addresses areas with higher potential for fraud or error. So what happens where significant estimation or judgment is involved from the management side, like in case of impairment testing, in case of expected credit losses, in case of creating provisions. So there, in case of financial instruments, right? In case of compound instruments, like an instrument having equity and debt component together. So those kind of complex transactions, leasing, subleasing transaction, ESOPs. So in those kind of transactions, there is a higher risk of misstatement. So from auditor's perspective, we need to focus more on those transactions because those are complex in nature. So we need to devote sufficient time on those transactions. One more aspect here is conduct walkthroughs. Walkthroughs is nothing but design and implementation testing. So we walk through the process which we have understood in the entity through design and implementation testing. Verify, that's the reason why it is saying verifies the flow of transactions and controls. That is what design and implementation testing means. Types of ROM. The first one is financial statement level risk. So at financial statement level, certain whatever risks are there, that is one type of risk, and the other type of risk is assertion level risk. Assertion is nothing but the trade for which we check any particular account balance. Say for example, revenue. In case of revenue, completeness is a risk. That is the reason why we do cutoff testing, whether all the revenues have been recognized, or maybe the revenues which were not pertaining to the current year were recognized too. So that is one assertion. Completeness may be one assertion level risk. So in case of revenue, so what are the assertions for which we test items? Those are balance, existence, completeness, valuation, or accuracy. Existence is whether that particular asset is existing or not. Completeness, whether a particular item has been completely recognized or not. Valuation, maybe a particular building is having a valuation of 50 crores, but we have got it undervalued at 40 crores. Inventory is overvalued by 10 crores. So that is a valuation assertion. Accuracy, that whatever data is reflecting in books of accounts, that data has to come to the financial statements accurately. Similarly, whatever uh, financial data is there at document and record level, that has to come to the books of accounts accurately. So one example is given: inventory may be overstated due to obsolete or slow moving stock affecting valuation assertion. Then evaluate design of controls. We have already discussed. Determining implementation of controls. This also we discussed. Okay, how do we do DNI testing? Assess control risk and overall risk. Control effective overall risk determination we do through control risk and inherent risk assessment. Test operating effectiveness, OE testing. I have already shown to you how we do operating effectiveness testing in controls. The sample set of 25 samples we showed to you. From that, basically you will be able to understand how exactly we test operating effectiveness of any control. Then finally, design further procedures, which is basically not a part of this session, but I have already given you an indication that it includes substantive procedures, which includes test of details and analytical procedures. And definitely inquiry, observations, all those things are a part of it. Evaluating controls through all whatever we have learned in the past two sessions, we evaluate controls accordingly, and we give responses as auditors to those identified risks. So this we already discussed, that risk assessment, determination of materiality. Again, the same thing has been detailed here. So what could be the different business cycles on which we need to do controls testing on? Like order to cash, it signifies sales, sales to collection. Then procure to pay, purchase to pay, inventory management, payroll. These type of items may be there, cycles may be there, where we need to undertake the exercise of control assessment, risk assessment and control assessment. Then understanding a business cycle. So all these we have already done. So case study I am not taking up now. Let me just have a look at the time. No, it's so last 5 minutes I would like to devote on questions if any. So in case you have any questions, you can ask me. So Ankita,
Sir, uh,
yes, you can see if there are any questions, then I'll respond to those.
yes, sir, just a minute.
Yeah. So guys, whatever, so in the past two sessions, whatever feedback you have, you definitely share it with ICAI. Okay. So one question I received, sir, could you please explain in short interrelationship between inherent risk, control risk, and detection risk? Okay. I will re-explain it. Inherent risks are those risks that are actually beyond our control. What risks are beyond our control? That those are industry risks, or maybe the organization level risks, that ELC risk, entity level risks. Those risks may be considered as inherent risks. Say, for example, the management of the company is not as experienced, as much experience they should have to run that organization. So that is definitely an inherent risk, which we have identified in the entity. But when that is the case, that will further cascade to the controls also. If a person does not have sufficient experience, then the people who are working under him, who may have been working for the past 20, 25, 40 years, they know the ins and outs of the business. So they are in a better position to do any malicious activity without the management knowing it. So that again directly impacts the controls also. Then, if inherent risk is high, control risk is high, then definitely, if I do not address those risks through my procedures, through my audit procedures, if I do not check everything in detail, there is a high risk that it will miss my detection. Maybe there may be a possibility that I will be missing on certain aspects which were critical for my opinion. So this particular relationship you can consider as a interrelationship between inherent risk and control risk and detection risk. And higher the inherent risk and control risk, I have to keep detection risk to the acceptably low level. I cannot, and for that, I need to enhance my audit procedures. I need to do more sample testing. I need to do more analytical procedures. I cannot just rely on the inquiries. I need to corroborate everything from the underlying records and documents. So all that has to come through my procedures. Hope I'm clear to you now. So any other questions, Ankita?
No, sir.
No? So guys, thank you very much. It was pleasure taking this session with you all. You have been a good audience all through. You asked many questions, though I expected more questions, because this is a subject where while studying, unless and until we have practical exposure to it, we try to figure out how exactly it works. So it transpires into a lot of questions. But anyways, keep learning. And again, a big thank you to ICAI Board of Studies for inviting me to this session. I'm really happy to take this session, and definitely I'll be continuing these services in future as well. Thank you very much.
Thank you, sir, for this wonderful session. Yes, yes.